All right, now let's view a clip on Biztech Asian Midday Marketwatch, a discussion between host Brian Fernandez with guest Tina Teng, market analyst APAC and Canada CMC Markets. A conversation on insights on regional markets performance and touch on the risk, result, data points for the rest of this week that may move markets.
Now, overall, if you look at the ASX now, moving on to the ASX in your part of the woods, ASX is pretty resilient, and also there seems to be an outperformance in defensive stocks and resources. Tell us a little bit about that and how we should play the game in terms of our lens as investors.
So this all happened just last week when the RB and the Reserve Bank of Australia downsized its rate hike by 25 basis points because markets was expecting the Reserve Bank to raise 50 basis points. However, the Reserve Bank only raised 25 basis points. There's kind of like they have already hit a peak of hawkishness. This is why the whole sentiment across the ASX actually has been lifted, and also a drop in the Australian dollar could support the export. So this dovish turnaround of the RBA just lifted sentiment in Australia and a rebound in the price of resources and energy. Like last week, the oil price has been rising for 5 trading days. And also, I think the energy and the commodities now are in a kind of like a rebounding trend, supports the Australia. That's a commodity heavy index.
Now, then, Tina, I want to look at bonds then. Are you seeing some pockets of bond markets being oversold, perhaps?
In the short term, I think the U.S. bonds probably have been oversold. We can see the 10-year U.S. bond yield now is approaching 4%, which is resistance. Probably a short-term pullback is in expectation. That's why in the Asian session today, we can see a slightly pullback in the bond yields, which supported this U.S. equity futures, seeing a little bit green today. And I know that the Asian markets now are still in red, like especially the Chinese markets. We can see the Hong Seng index in a downturn as well. I think just now because the rate hike of the Fed forced the APAC region, especially Southeast Asia or the central banks, they have to catch up the interest rate as well. But just a rapid raising rates actually are hurting investment confidence as well as the economic outlook. That's why we can see right now it's very different moves between US and the Chinese related stocks.
And then how about then the UK with all the policy flip-flops? What's the investors' view now in terms of the bond markets as well as UK as an investment destination?
Since in the UK, the Bank of England now, they are signaling that they could continue to buy the bonds because, like as we all know, like last 2 weeks, the new Prime Minister they launched a new stimulus package, which really causes the bond markets rout in the UK. So that's very dangerous for the whole economy. So the Bank of England now they have to do something to save the bond markets. In the regional schedule, this bond buying program will end by the end of the week, but there are speculation that they could extend by bond buying. So it's all around this bond markets, if they would continue to buy the bonds or not. If they don't, probably we could see there will be another crash of the British pound as well as their bond markets.